Hello, my name is André Cassaman. I'm chairing the ITFA FinTech Committee, and we are here at the Investor Day with Trade Finance Global.
Hello, I'm Mark Abrams. I run the working capital business at Trade Finance Global and also one of the founders. So, Andre, great to be here with you. Can you just break it down and explain to us what are originators and why are they important?
So originators are key because they service clients, the end customers who need liquidity. Originators can be banks, of course. That's a traditional trade origination market. They can be factoring companies for sub-investment grade market for sure. And more recently, we have seen many new non-bank lenders entering the market. We could describe them as fintechs, but actually they don't sell technology. They extend liquidity to SMEs and basically democratizing supply chain finance to the mid-cap and SME market.
Thank you very much. And then, so that is the originators, the non-bank financial institutions, the lenders funding those corporates, those SMEs. And on the other side, what is distribution and why is it important?
So distribution is important because not all lenders, in particular the non-bank lenders, have huge balance sheets to rely on. So they need third parties, partners, extending liquidity, and basically funders funding the funders. So in the distribution space, we see originators getting liquidity from partners like institutional investors and asset managers, but also from banks. We also have credit insurers active in the distribution space, taking on, of course, the credit risk. So there is more and more counterparties, financial institutions such as those credit insurers, those institutional investors and their asset managers, adding value on transactions. So there is really strong collaboration in the distribution space so that everyone can add value on transactions as they see fit.
And that third limb, that third party, which is the capital markets or institutional investors, what are you seeing from them? What's the interest? What's their view of the asset class?
Well, the first time I heard about distribution and capital markets was 2011, so more than 10 years ago. And the banks were really keen to start working with institutional investors as they were feeling the impact of Basel would hit them sooner or later. And that will happen. 2025, there is impact from Basel regulations. Now, the issue we have witnessed, though, is the alignment on the pricing side. Banks are really focusing on usually the investment-grade corporates having very low yield on transactions and focusing on low-risk types of assets. And this is where sometimes you have a pricing disconnect with the expectations on the institutional investor side, which is why the market has shifted from an early adopters point of view, which is my focus in that space, getting early adopters and delivering proof points, is the market has shifted to institutional investors gaining interest in alternative lenders. SME-focused lenders, they could be banks, local banks, they could be large banks as well, but definitely funding SMEs. And at the Investor Day, indeed, we're going to demonstrate how alternative lenders and institutional investors are working together to extend liquidity to those SMEs.
Thank you.
So Mark, can you tell us about the background of Trade Finance Global?
Sure. So the company's been running for 9 years. From my personal perspective, I'm one of the co-founders. I was a trade structured commodity finance lawyer, so working with large corporates. In terms of the Trade Finance Global team, we've always loved trade and cross-border flows. But the question for us was that there were two things that we wanted to solve. One is further access to information, education in the market to actually bring more market participants in. That could be anything from SMEs understanding how to trade to actually new capacity, new liquidity coming into the market. And the other side was actually bringing that new capacity in. So more funding that was coming into the trade finance market, because our view is always that it can't just be the largest corporates in the world taking the lion's share of all of the financing. There is a huge market here, a massive demand for credit. And the more that we can assist with actually bringing that credit into that mid-market, the better. So the company has two limbs. One is information, one is financing. On the financing side, we're probably around about 35% commodities, which is agri, metals, so prime and scrap base oil lubricants. Outside of that is anything else, so OEMs, machinery, pharma, distribution, entertainment companies. So anyone you can think of, treasurers, CFOs who are thinking or looking at typically cross-border flows from pre-export to on the water to inventory to receivables finance, come to us for liquidity. And on the other side, the information side, we have a number of different teams there that run everything from TradeFinanceGlobal.com to Spotify, so Trade Finance Talks, where we'll see heads of trade at banks, insurers talk about the trade world, to Trade Finance Talks TV, where we have a team that will go and interview policymakers and decision makers around the world. And also partnering with large trade bodies like BAFT, ITFA, ICC, the World Trade Organization, with the sole aim there is to distribute and inform more globally in terms of what is going on and how to access further liquidity and just understand how to trade. So those two limbs, which are both information and financing.
Okay, very, very nice. And indeed, I see Trade Finance Global at many of those events, including recently in Abu Dhabi at the ITFA conference. So tell me about the TFG Distribute product on the financing side.
Absolutely. So for the last 9 years, our sole aim has been on the financing side to onboard further liquidity providers, and that could be banks, funds, alternative lenders, to work with them as map their risk criteria and do the same, exactly the same on the SME, corporate, FI side, and just introduce both parties. And that has been our structure. However, what we've seen over the last 12 to 24 months is more and more liquidity coming to us. There's more interest from a private credit perspective, but also from our large banks that might not be actually in the SME or the mid-market space. So you've got, on the one side, it's large institutional funders, which may be interested in accessing further another space, but for whatever reason, will just not be equipped to originate and hold those assets. But on the other side, we'll see lots of different funders wanting to access this market. So we saw that there was a real need to step into this space and actually service, hold, build books of assets for those different funders. And something I'm talking about tomorrow is just what different funder requirements have. So we don't think that one size fits all for one funder. And we think that's one of the largest issues in this market. That very few participants historically have worked together, but actually if we work with more technology providers, which are some providers that you've worked with and we've worked together in the past, but also working with new capital providers, but actually originating into what their credit box is, that's what we think is another interesting aspect or way to actually grow and reduce in a small way the $2.5 trillion trade finance gap.
Yeah, you're definitely focusing on the SME market, mid-market, and contributing to closing the trade finance gap, which is exactly what we're going to focus on tomorrow. So definitely looking forward to hearing your presentation and testimonial tomorrow. How do you see Trade Finance Global Distribute evolve in the future?
So our aim is to bring more market participants in. So we want to do more proof of concept. We want to build different asset books and just bring more funders into the market. And only by doing that and educating and informing and basically getting new liquidity and old liquidity interested in understanding more asset books, that allows you distribution. So only if you're dealing with a small pool of actual institutional investors or banks, we're never going to really close the gap. Yeah. But by bringing, educating, informing, but also bringing further capacity in a closed, structured way, it will allow more and more capacity to flow into that market. And we can only do that by working with partners like yourself.
Thank you, Mark. Terrific. Looking forward to engaging with our audience tomorrow.
Thank you very much.
Welcome.
Thanks.